Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. I know I'm coming at you a bit later than usual, coming at you actually after the market opens, because frankly, I'm on the West Coast, and when I'm here in California, I don't really feel like getting up at 4 o'clock in the morning all the time, and so I slept in. Yeah, I did, and it's great. And the best part about it is I didn't really miss anything, because all of our confirmation entries, none of them met entry, and it's why we do confirmation entry. So let's go ahead and dive right in. For those of you new to the channel, do me a favor, click that subscribe button down below so that you get the updates as they become available, and also make sure you share the page with a friend of yours. Tell them about what it is that we do. All right, let's dive in. So the S&P, we're up 8.5 this morning as we are in the first 15 minutes of market open. And, we had a reversal trade up here. Now, the thing to point out is that this is a dashed line, and anytime the line is dashed, that means that we anticipate price to come in and we get short as it comes out, and we only do that if it comes out of here once that trade has been activated. But by being a dashed line, we know it's lower probability, and so no surprise that it's completely failed. I'm not surprised one bit, and so now we're kind of continuing our march higher. Was really hoping yesterday I'd get a little bit of a pullback into this region to let us get long, but we were not able to get filled up on that. And so many of you may have recognized that we had a potential little breakout opportunity here, and taken that as in the overnight setups. I will say that as far as right now, I would like to wait for a little bit of a pullback. This range here looks like it'll be a pretty good range if we do indeed pull back into that area. When I look at this on the bigger picture, we're just about to an all-time high. So once again, our rules at all-time highs basically remain the same, right? Don't spit into the wind, don't pull on Superman's cape, and don't short the all-time high. And so, I think that we'll definitely, get a pullback off of this high. I think that a pullback is imminent from this high. I'm just not sure when it's going to come. So I will be very vigilant in keeping an eye on when we get to this region and to this area. That being said, there's no reason right now to try to short this market. I think we'll get a little bit of a pullback off of that area. I'm not going to try to pick it. I think that that's a mistake to try to short it when we get to that high. I think, as for right now, if we get a retest back into this area here, I'd be more than willing to take a flyer on a retest, on a pullback into that region. You may even want to widen it out and take this whole area based on your risk tolerance. The NQ, same exact thing. If you look yesterday, we got a trade into here. The activation, we got to get halfway into activate. We didn't really come out of it, and so we've come right through it. So now we're coming up to this gap, which was our all-time high. And this gap, if you remember, was the gap down on Facebook. On Facebook's earnings report, so we're coming back up to it. Facebook and Netflix disappointed on earnings, but Google and Apple didn't, and so that's really what's driving a lot of what's happening in the markets. But we are seeing this high upper wick here on the hourly chart. Not a whole lot of follow through so far, but we are definitely gapping higher. If you just look at the ETF. You'll see that we definitely did gap higher. And traditionally, when we get those kind of gaps, the first candlestick can sometimes shake some people out. But oftentimes you'll see a gap on that where there's a gap and go, where we continue in the direction of that gap. Like for example, this one that we had here, where we had that strong gap and go. But other times it'll go the other way around, right? We had the gap up and then a fade back. So I'm not playing either one at the moment. I need a good solid level for me to be interested in it, and right now I don't have one. I'm not certainly shorting, so there's that. I will be more inclined to buy on a pullback, but there's a lot of these little pullbacks in here. I go to a 15-minute chart, which I don't really love to go to smaller time frames if I don't have to very often. And I really like this one down here on the 15-minute time period. This one sticks out to me as a really interesting opportunity. So I'm gonna leave that one in play. But we're changing the colors because we change the colors when we've got lower degrees of probability. All right, crude oil. So crude oil, we had that short set up a couple of days ago. Not a lot happened out of it. We've now kind of come back up, and we have fallen off of this area now twice. So twice we've hit this area and fallen down from this particular level without any force up through it. I think if we do break above there, we could have a little room to run. So I'm actually going to change the narrative a little bit and put a little breakout up here, as I think this could be a potential room to run on a breakout above that area. Gold, solid gold. I always say that from the Austin Powers movie Gold Member. It sticks in my head. All right. In this one, what am I looking at? Let's start with a 4-hour time period. And gold has really been just this steady, strong rollover effect, if you will. We have just in gold, put in a new swing high on the 4-hour chart. If I move this down to the 1-hour chart, I definitely would be more apt to be short than I am long. I don't know if any of these are going to hold because our 4-hour trend is the other direction. So you might want to take a gander at getting short. If you get short on a rally back up into here, right? A little pullback in the markets could give us a decent rally to get short in gold onto this area. And so this is one of those opportunities where you may be able to ride a pretty big wave, if you will, for quite a while if you get in on this thing. All right, let's look at the bonds, the Aussie, the Euro, the Canadian. And we've really not come near any of our currency trades the last couple of days for the most part, except our Canadian dollar yesterday. So in the Aussie, yesterday we talked about how we had this descending trend line, and typically when we break above one of those, you've got room to go, and that's kind of what we've seen here. Boom, room to go. It's rallied up pretty strong from that area. We still have this area of reversal up here that we're waiting on, but all in all, when I look at the Aussie, here's what I'm getting: whole bunch of tough sledding, right? So no need to force the trade. Tough sledding is my term, by the way, for things that are just trudging along. They're just slowly moving and not really one direction or the other. On the Euro, we still have a reversal trade way up here. We have rallied very nicely from this low down in this region here. Looking at this on a 4-hour chart, once again, a lot of sideways price action. No big surprise in that sideways price action. I'm wondering if we're going to put in a new higher swing high here in the Euro. This would be an interesting opportunity for a higher swing high. So if you're a little bit more adventurous, you might want to try to jump in on a long on the Euro. I don't like the fact that the momentum has slowed down for that long, but you could jump in on a long and maybe get a little bit of a run higher to the next big 4-hour reversal. On the Canadian, I put this one out yesterday thinking that we may have a decent opportunity to get long on a pullback into here and rally higher. The Canadian dollar then came and smacked me in the loony as it decided that, you know what, nope, not going to happen. Quick, short little stop out. So that one did not work out, and then of course it went the way I thought it was going to go anyway. But you know what, c'est la vie. That is life. Those trades do occur. Those trades do happen. Looking at it on the 4-hour chart, though, one of the things that I see is that we are putting in what could be a potential breakout potential. So keep an eye on this. I want to see what this looks like over the next couple of days as well. Great British Pound, Japanese Yen. So the Great British Pound, we've come into that daily area and we've kind of out of it. And yesterday I talked about using candle-to-candle style of trading. And candle-to-candle style of trading on a daily chart would tell me that I get long when I have a higher high. I do not yet have a higher high on any of these candlesticks. So no reason yet to even think about trying this trade. I'd need a higher high on the daily chart for that candle-to-candle style. Because remember, this level was found on the daily time period. In the copper, we've got still a reversal level up above us here. And then in Japanese yen, we missed our entry. It did not quite get us filled on this area down here. We're still holding strong on that bad boy. So those are the different levels that we have set up for the day. As far as today goes, I feel like we've got more upward mobility and more higher marching, but wait to see if you want to join into some of these trends on a pullback. That will be your better opportunity to get long when price comes back down into your areas. So if you've got any questions, please feel free to shoot us an email. You will be able to find us. You can shoot me an email, chuck@iiefinancial.com. Until tomorrow, I'll see you all soon. Later.